Okay, folks. Sorry, the wire fell out from my microphone right at the last minute. There is normally the case. Can I get an audio check, please? Mike, hello. Good for you. Good for you. The option sellers did well. I mean, it wasn't much of a big move, but yeah, they didn't see that stock move too much. I'm going to talk about that chart. I want to talk about the 30-minute chart in a moment of Nvidia, because I think there's a trade to be had there this coming week. So we'll chat about that. Mark, thank you. Thanks, Jeff. Here in the famous Bob, except in my house. I'm not that famous here. Jeff, hey, welcome, pal. Trader Isaac, hell, Bob, and all. But we'll go finally hold this move and not fade again. I think we all need to worry about just one chart, the US dollar. And the US dollar is not looking good. Speaking of the dollar, we're going to go over that in a couple of minutes. Before we get into it, I want to say I hope everybody had an awesome Thanksgiving. Mine was really, really great. As a matter of fact, I think this is, other than the live stream we did yesterday, the Small Account Club, this is the first live stream since last Sunday. So it's been a while. Good to be back. And I had an awesome Thanksgiving. Very happy about it. And we're going to talk about, obviously, the opening price action here of the E-minis. They're selling it off somewhat. It's an ugly candlestick to start off the week. Let's see whether or not they close this 5-minute bar at or lower from where we're trading at current. Now, yesterday I did the Small Account Club. That goes private live stream in January. If you're not on our list for those private live streams, link below, and just enter your email address. We hate spam too. Small Account Club. And for those folks not familiar with technical analysis, you want a brief crash course in some of the terminology I use, link below. My top 5 favorite candlestick patterns video tutorial, free of charge. So take advantage of it. We have more people popping in here. Good stuff. Denny, hey, welcome, pal. TZ Burton, welcome. All eyes on OPEC this week. What do they do? I know they were supposed to meet last week, but they postponed that meeting. So we're going to go over the price of oil in the moment. We'll see what the traders are doing there. Paul, good evening to you, my friend. All right, so let's get to it. We have, let's begin with it. Like, subscribe. You know the deal. Let's begin with the E-mini futures. They are off their session lows here, but right out of the gate, there was some selling pressure. Now, we have trend right at about 4,565, and we closed below that trend line, 5-minute trend line, not that serious. They're going to rally this back up in a moment, but I think it fails. I think we're going to break lower. Let's move on to the NQ. That's the NASDAQ 100 futures, basically the trip Qs. And wow, they're down more measurably than the S&P 500. Now, keep in mind where we're trading at current on the Qs, we're a stone's throw away from a new 52-week high, and we're still a stone's throw away from new all-time highs. Now, I'll probably get to this in a moment. I forgot to bring up the chart. I'll have to do it live. But right now, the S&P 500, if you take a look at a weekly chart, is right up against a downtrending resistance level. And the debate is, do we have the rocket fuel to get through that resistance level and to make our way to new all-time highs. Judging by last week's volume, no, but it was an abbreviated week, so we can't go by that. So I think that this week we need to look for some strong up volume bars to be able to rally through that upper band of resistance. So at current, the NQ NASDAQ 100 down spot 19%. And it looks as though we are probably going to rally back here a bit, but I'm not going to be the least bit surprised to see us wake up tomorrow morning with red futures. It looks like they're going to try to take out lows here. Okay. I think they take this out. The Russell 2000, down about the same as the NQ. Initially, they rallied the Russell 2000, and now it's given all of it back. And we have a double top and a confirmation. Well, not yet a confirmation breakdown because we didn't close there. But if we close down below this lower low, and again, this is a 5-minute chart. We're not day traders here, but just for the conversation that we're having here, watching on a Sunday evening in futures, this would be a confirmation breakdown to close below this lower low at 1807. And we have some buyers stepping in here now. So maybe they'll hold it. Let's check in with the Dow. We don't always talk about the Dow, but I figured let's take a look at it this evening. And the Dow is holding up better than the other indexes. We're holding that 21 period. Well, not anymore. We just fell below it. Right here in orange is the 21 EMA. And there's a little bit of a battle going on there. So what we want to know is, do we hold support? NQ just broke to new lower lows. And there you have it. We're now down spot 22%. I'm not seeing a lot of selling pressure behind this new lower low. Okay. Let's move on. We did equities. Let's check in with the U.S. dollar. The dollar, they are trying to bid the dollar. Usually on a Sunday evening, you don't get much price action on the dollar. You get more price action on the euro, yen. But this evening, we're seeing some price action here on the dollar. If I had to hazard a guess here, it appears as though it is bullish price action. They're trying to break this out. Let's check in with the euro. And this goes back to Trader Isaac's question. Do we get a breakout in the price of gold? It really all depends upon the dollar. What's the dollar going to do? Hey, Wendy, how are you? So now that we know what the dollar is doing, let's take a look at the 10-year yield, because we want to play a little bit of a detective game here. Actually, let's check in with the euro and yen first. Euro is flat. Yen must be up. No, it's not. It's basically flat as well. So that's giving the dollar a little bit of room to run here. Let's check in with yields, and then we'll segue into commodities. Oh, all right. So I think we have a little bit of an inkling of what's going on here, and we're seeing a sizable move up in the 10-year yield, and equities don't like that. In particular, small caps don't like that. So we're now back up to around 4.5% on the 10-year. Let's pull back to a 4-hour view to get a vibe for, will we get the carry through into tomorrow morning? And I got to say, this is a pretty aggressive chart. We spent a good portion of the week last week consolidating. In fact, we spent all week last week consolidating, and now we're pushing up. So we've gone from putting in new lower lows and lower highs to now a breakout. And now we're putting in higher lows and now higher highs. So yields, that momentum is beginning to go from negative to neutral to now positive. And the markets don't like that. Now, volatility is not really getting a big vid here. Not much in terms of volatility action at all. Lower right corner is volatility. Now, we've done the dollar, we've done the 10-year yield. We have a good feel for, okay, we have some catalysts out there that could drive the market. Remember, not only do the markets do not like the rise of 10-year yield, they don't like the rise in the dollar as well. So those two issues, if they continue to move up higher, that's going to be a headwind for the equity markets, especially given where we're at in terms of resistance on the S&P 500. Now, moving on to commodities, light sweet crude. Now, that broke out last week. Actually, it didn't break out last week. Light sweet crude broke out 3 weeks ago, but then we've had the 2 sequential week, very, very volatile, but a retest of the breakout point. And last week it held. It rallied off the lows of the week and held that breakout. So right now, oil under a little bit of pressure, but something to clearly watch. Now, shifting gears over to nat gas. Now, nat gas, frankly, has been my problem child for the past few weeks. And once again, it's my problem child for the new trading week. Now, the problem with nat gas is that supplies are too high. So we need to hope for some cold weather here in the United States to drive these prices up higher. And the temperature is dropping here in New York. So that's a good thing. So maybe we'll get a reversal. This is a 4-hour chart. Here's the 5-minute. So here's your gap down. Hopefully they're trying to take out stops and they'll bring nat gas up as the cold weather begins to settle in here. And in fact, what I'm going to do is when we talk about stocks that we're looking to watch for the new trading week or stock recommendation or request, I'm going to go over the seasonality of nat gas for curiosity purposes. Now, taking a look at, I have silver in front of me. Let's start it off with silver. Wow, nice move up higher here for silver. We are long of silver. We added 2 weeks ago to our position, and it's been treating us really, really well. So silver out of the gates here, despite the fact that the dollar is up, yields are up, silver's up, bullish. Now, taking a look at gold, gold not doing as well. And it's no great shock. We're at resistance. We have the dollar up, yields up. And the yields aren't as big of a problem for gold as what a lot of traders want you to believe. They always come out and say, oh, 10-year yield is higher. That means that gold can't move up. That's wrong. That's wrong. You go back to the 1970s, gold and the 10-year yield went like this together. What didn't go like this was the US dollar. US dollar went like this. So it's just by happenstance right now that you have the 10-year yield rising along with the price of the dollar over the past couple of years, because what does that signify? Rising interest rate environment? Well, stronger US dollar because the Federal Reserve is in a tightening mode. But what happens when the markets start to price in rate cuts, as they're doing in March and in May now, and in fact, they're saying no more rate hikes until March. So what does that tell you about the US dollar? Should it go up or should it go down? Well, you tell me, is life getting cheaper? I don't think so. So if life is not getting cheaper, we're still feeling inflationary pressures, yet the dollar is dropping because the Federal Reserve is not going to raise rates. Guess what that dropping US dollar does? It sparks more inflation because raw goods are priced in US dollars. If the dollar drops, while producers in the United States have to pay more for their input costs, especially energy, and that drives up the price of a widget. Simple as that. But be that as it may, the Federal Reserve is done raising rates. Okay. Now, moving on to agriculture. Actually, no, live cattle. Live cattle. Let's go to a weekly view here. And we saw a continuation breakdown on live cattle. This must be freaking the globalists out. They don't want this. They want the price of cattle to go through the roof. So you're eating bugs. They don't want you looking at that filet mignon. They don't want you looking at that New York strip, as I love. They want you eating crickets. And this is not good for their agenda. We're going to be talking quite a bit about that agenda in a little while. So, good. My New York strip may get cheaper. Corn futures, very close to a continuation breakdown. Looks like it's a foregone conclusion here. That's what's going to happen. We have broken down below support, resistance at these moving averages. We're going lower on corn. Soybean, actually, I skipped soybeans. Wheat. Wheat not looking good. Wheat continuation breakdown last week. I would not be a buyer here. Soybeans. This is clearly bearish key reversal territory. Week 1, week 2, week 3. This should get resolved with a continuation breakdown on soybeans. Now, if it doesn't, I mean, if you look at this chart and we manage to close the week out this coming week above these resistance levels here, well, that just clearly tells you that you need to be a buyer, aggressive buyer of soybeans, because this is a chart that says, man, this commodity has to go down. Technically speaking, it has to go down. I don't know anything about the fundamentals, zero. All I know is that soy is not good for testosterone because it produces estrogen. Be careful what you eat, all the soybean oil. Anyway, I digress. So it looks as though we're going to get lower lows here on soybeans. What did I miss? Usually there's something I missed. I'm feeling good here. I don't think I missed anything. Let's go to comments. Zia, so Catalyst is possible good earnings. Okay. Mike's got his opinion. Good stuff. Weekly chart has possible bullish potential. Okay. Patrick, hey buddy, how you doing? Hope you enjoyed your Thanksgiving. All right. Seymour Rivers, hey buddy. I'm enjoying this live episode. Well, it's great to have you here. Thank you for being here. All right. Bob's got a new hobby, a few heads in the backyard. Yeah, right. Yeah, the problem is I'm one of these I'll eat it, I can't kill it. I'm one of those guys. I'm a pacifist, a meat-eating pacifist. As a matter of fact, when I was a little kid, my grandmother used to bring me down to the duck pond, and I used to feed the ducks. My favorite thing to do. But then at night, she was excellent at cooking duck, and I love duck. So talk about maybe a couple of screws missing up there, I guess. Good to hear, Pat. Good to hear, pal. Best to you and your family. Bonnie Bean. Happy Thanksgiving to you. Hope yours was wonderful. All right, let's get to it. I forgot to bring up my standard stuff. So let's do this. We're going to do this fragmented a bit. Let me get my stuff ready here. I thought I was prepared, and I was not entirely prepared. So let me get up. We want Market Watch. We want the CME Watch tool. And what we didn't have an opportunity to go over last week is the Federal Reserve's balance sheet. And frankly, I have yet to look at it myself. So we're going to take a look at that as well. So let's get to it. Okay. Going into the new trading week, we have the S&P 500 with a PE ratio of nearly 31. Very, very expensive. Now, keep in mind that if you have yields rising, what does that do? It's an impact on EPS. So if that continues, well, then stocks on a forward-looking basis become more expensive. So these fairy tale forward-looking PE ratios that they have on the market right now, which are very, very reasonable to the average person, I don't really go by that. I like to go by the rear view mirror. What have companies done? How are their guidance? And not by these analysts that put out these forward-looking PE multiples. So this is not good. I mean, right now they're forecasting a 17, 18 PE handle. Forward-looking on the PE on the S&P 500, I don't know, that delusion kind of gets shattered once you get rising yields. And take a look at forward-looking guidance from the names of NVIDIA. Clearly, while they're still growing, their growth rate is dropping. Or I should say it's not accelerating at the rate as it once was, to be fair, crisp, clear, concise. So stocks are expensive from our measurement. Now, on Monday, we just get new home sales. Not a big deal there. Tuesday, consumer confidence, biggie. We have a bunch of Fed heads out for whatever reason. We're going to get GDP, the first revision. Oh, I see what's coming up. Thursday, we have the PCE index. It's like the CPI, but the Federal Reserve's favorite indicator of inflation. So market participants are going to be looking at this very, very carefully as you proceed into the new trading week. We're also going to get initial jobless claims. They've been trending up some. So the Federal Reserve's wet dream of seeing jobless claims rise, well, that's being seen. Jobless claims are rising. More Fed heads coming out. On Friday, we're going to get the ISM manufacturing index coming out. That's been in contraction for several months now, if not over a year. Or any read below 50 is a sign of contraction. Any read above 50 is a sign of expansion. You could see that analysts are expecting more contraction in manufacturing. We're going to have Jay Powell speaking on Friday. So let's not forget about that. Put that on your calendars. 11 a.m., you're going to have Jay Powell out. Okay. It looks as though we're going to have more nonsense coming out of Washington as they return. And they'll be looking to take more of our hard-earned dollars and sending them over to the Middle East and Ukraine. Pat, Catalyst Live Auctions, Tennessee, still at all-time highs, $290 to $310 a pound on the Huff was just at 1. Okay. All right. Thanks for that, Pat. Okay. Taking a look at Federal Reserve probability, the Fed Watch tool, the probability of rate hikes. There is no probability of a rate hike in December, nor is there a probability of a rate hike in January. Well, that's changed a little bit. This was at 100% a few days ago. So the probability is still by and large no rate hike in January. Then you skip to March. And this is where it becomes a little bit more interesting. So this has dropped down a bit. We were at, where were we? Yeah, a week ago, there was a 28% probability of a rate cut. That has dropped down by about 5%. Now, when you go to May, that's where things get really interesting because the probability, this is the first month that you look at where the probability of a rate cut outweighs pause, no change whatsoever, and forget about a rate hike. So you could see that the markets are prepping for something here. And usually in this type of scenario, it's a recessionary event. What's gonna be the final nail in the coffin that sends equities down lower? Not quite sure. Could be a bank, big bank. For all I know, we don't know. We're not that smart. All we need to do is watch the yield curve, which I was unprepared for, but have at the ready nonetheless. And you can see that on the month so far, we're very close to close enough for government work here. We're seeing an outside reversal bar on the yield curve. Now, for equities, if the yield curve is still inverted, well, the equities could still fight up higher, especially when you're seeing a probability of a rate cut out in May and in March on the rise. Now, it's when the yield curve uninverts. That's when things get real fast. So if yields stay tame right now, if the yield curve closes down where we're trading right now, it bodes for a continuation pullback going into December, and that can allow for equities to continue up higher. Now, looking at the Federal Reserve's balance sheet, we did not go live on Thursday because it was Thanksgiving, so let's play catch up. This is probably the smallest decrease in the Federal Reserve's balance sheet since I've been watching this. I mean, really not much of a drop whatsoever. $4 billion around there, give or take $100 million. So not much of a drop. Could it be because it's a holiday week? Maybe. Okay, so with that, where is, here's what I want. All right, so, we live busy lives, right? And I get that. But sometimes, you you see one event and then another one piles on, and all of a sudden, there's a lot of change going on. There's a tremendous amount of geopolitical change going on, and some of it's for the better, some of it's for the worse. By and large, I think it's for the better, but let's go through it. I mean, over in London last week, they allowed Hamas to have reign free over the city. And Tommy Robinson, I don't expect anybody to know who Tommy Robinson is, but he's basically a political prisoner over in uh, England because he's been reporting about the pedophiles, the so-called Muslim pedophiles over in the grooming rings over in England, and the government has it out for him. They've jailed him a bunch of times, and they arrested him yesterday because he was reporting on a protest that he wasn't even a part of. So they arrested him and they took him away. Yet Hamas is allowed to run reign over the city of London. Go figure. So not good, but this can only last so long. So when you see this, when you see Hamas running rampant, yet Tommy Robinson gets arrested, people are going to get tired of this. Just like the Dutch farmers, they're going to get tired of this. And I forgot to bring up that article. In Dublin, you have the people they are freaking out about the stabbing of children over there, and they want mass deportations. So this migrant problem that Europe has invited in is now blowing up in their faces. It's happened in Paris. It's happened pretty much in every country that's allowed this type of behavior and this type of immigration. And now you're seeing the governments begin to buckle. Germany's far-right party now polls higher than the three parties in government. The Netherlands, they have elected their first right-wing politician, or prime minister, I should say. The question is, can he get they have to have, they have so many parties over there. You need to get a group of parties together and come up with some sort of what do they call it? You need to have a certain number of people, coalition government. Thank God I got that out. So he's got to form a coalition government to have any type of power. So that's still to come. But you can see that country that's been ruled by the left wing for over 40 years, that's fallen now. Argentina. This guy is a mad lad. He's based as heck. This is the first right wing. Argentina was the wealthiest country in the world at one point in time, and that was as recently as the 1950s. Then the left wing got a hold of government, and they have been in complete turmoil ever since. And he wants to shut down the central bank. Will he succeed? Not quite sure, but he seems to be doing the right thing so far. And he's saying that shutting down the central bank is non-negotiable. Why do you want to shut down central banks? Well, what's the purpose of a central bank? It's to create inflation. It's to steal money from the poor and give it to the rich. It's to decrease the purchasing power of the US dollar. Think about what was formed in 1913, the same year as the Federal Reserve System of the United States, the IRS. No real coincidence there. So you're seeing a lot of change go on. Syria, headlines now talking about a drawdown from Syria. Why? We're under constant attack. Because you have the Iranians that are attacking, they're using proxies, just like we're using the Ukrainians as proxies in a war against Russia. They're using drones against our folks over there, and I have no idea why we're even there. Let's get out. This is going on. Now, I wouldn't have reported on this, but this is now at least the third time I've seen an Israeli-linked tanker seized. The first one was in the Suez Canal, and I said that if this becomes a trend, you're going to see the impact on the price of oil, especially if something happens at the Straits of Hormuz, which is the bottleneck at the Persian Gulf. So this continues to go on over in the Middle East. Then you segue over and into the Ukraine. If they're not in peace talks right now, they should be. The Ukrainians should be suing for peace, because I think that we are done with sending funds over to the Ukraine as we've done in the past. I'm sure we're going to be rebuilding it. I'm sure that we're going to still fund them somehow, some way. There's a little war that we like to say that we're not really involved in, which we are. But you can see that this is now getting drawn down. Here in the States, clearly Donald Trump is the front runner. I happen to like DeSantis quite a bit, but I think that DeSantis really had horrible, horrible guidance from the Bush people, and he shouldn't have run. He should have waited. He could have been tapped as VP, but Trump will be the front runner. And in terms of his performance relative to Joe Biden, I mean, the fact that they're even admitting this, the pollsters, is amazing that Biden is horrible in the polls versus Trump. Now, the reason why I want to talk about all this is because Klaus Schwab came out with a statement that I forgot. I thought I saved it. I didn't save it. Basically, this came out on the 22nd, so a couple of days ago, that he's fearful of the masses rising up and pushing back on the World Economic Forum's agenda. And he's right. He's right. For the first time, I agree with Klaus Schwab. Something just happened. That's the Dow. Yeah, it finally broke. Okay. So the Dow broke, but still down only fractionally. Now, moving on to, what I do not shop here. I don't know what this is. How dare they put that up there and embarrass me? Brace yourself for what's coming in 2024. Victor Davis Hanson warns the left knows they're cooked if vampire Trump wins. I'm not going to read through this whole thing. They are terrified of him because they think he's smarter this time, and then he has the just cause to really get angry because of what they did to him. I don't think we can argue that. If a MAGA candidate wins and they win both the House and the Senate, they are cooked. No doubt about it. So you have a lot of people that committed a lot of serious crimes, and they continue to perpetuate those crimes in the hopes that this guy does not get into office. But there will be a day of retaliation if he does get into office, and that is what has them most motivated to get their agenda pushed as quickly as possible, so that way they can hope to stave off a victory by the right wing here in the United States, because people are going to jail, as they should, for many, many various crimes that they've committed over the past 5 years. So, this is going to motivate the far left to do some wacky stuff overseas and at home. Now, the one that I've seen, for whatever reason, popping up quite a bit lately is over in the EU. Now, the EU, this first struck me as typical of bureaucrats. Remember what drives the agenda of the World Economic Forum. The World Economic Forum is by and large driven by very, very smart people. These are successful billionaires. They've made their millions and billions in life. Now they want to play God, and they want to tell you what to do with your life because they have so much money, they don't know what else to do except to play God. But what they need to rely upon to get their agenda through are the politicians. And for the most part, they're incompetent boobs who can't make it in the private sector. So what does the EU, the European Central Bank, do? They issue a $0 note, banknote, with the Titanic on it. What more of a illustration do you need to highlight the lack of self-awareness on the part of these bureaucrats? I mean, stunningly stupid, just stunningly stupid. But they did it anyway, and they did it unashamedly, and they don't even know what they did. They don't even know it, and they think they're geniuses for doing it. Fast forward. I love Italy. I've been there, traveled pretty much the entire country, and this is taking nothing away from the culture of Italy, nothing away from their people, nothing away from their food, lifestyle. Man, if I could retire there, and I just may, in Tuscany probably, I would. But in terms of the structure of the Eurozone, it's not a very good one. And just to illustrate, I've known about this for many years, but I like this chart and I wanted to share this because it was Goldman Sachs that basically cooked the books for the Italian government to get them into the EU. I'm sure the EU was like, hey, Goldman Sachs, can you cook the books so we can get them into the EU? Because they're one of the largest manufacturers in the European Union. So I don't know who this is, but this was reposted by one guy I follow. The absurdity of the euro in one chart. During 25 years before joining the Italian lira, you should have put a period there. The Italian lira lost 83% against the Deutschmark. Last 25 years, they have been pegged. What were politicians smoking when they put Italy and Germany into one currency? Fair enough. I mean, during the post-financial crisis, you had the pig countries. I don't like that acronym, to be frank with you, but it's what the street decided to call them. You had Portugal, Ireland, and Greece and Italy. Were the two eyes in that? I know Italy was one of them as well. Maybe two eyes and pig. But the southern countries had much more liberal social welfare programs. You didn't have the type of work schedule that the Germans did or the other economies in the north. So to try to blend them together and say that the quality of the European, the Italian way of running their economy relative to the Germans, you say that's equivalent. That's bananas. I mean, the Germans are pretty much nuts when it comes down to being precise, being efficient. And the Italians are great manufacturers as well, but they have a zest for life, and that comes through in their economics. I have no problem with it. So this just goes to show you the illustration of what the EU is really built on. It's built on bureaucrats. It's built on fuzzy math. And now what they're looking to do to even grow more powerful is to launch the digital EU. And here is this villain who is Christine Lagarde. And I want to play this little clip for you of what this Bond villainess had to say.
You're introducing the electronic euro, as I know.
Yeah.
So
yeah.
How can switching to an electronic currency help?
Now we have in Europe this threshold. Above 1,000 euros, you cannot pay cash. If you do, you are on the gray market. So you take your risk. You get caught, you are fined, or you go in jail. But you know, the digital euro is going to have a limited amount of control. There will be control. You're right. You're completely right.
I bet.
We are considering whether for very small amounts, you know, anything that is around 300, 400 euros, we could have a mechanism where there is zero control. But that could be dangerous. The terrorist attacks on France back 10 years ago were entirely financed by those very small anonymous credit cards that you can recharge in total anonymity.
Okay, so we know for a fact that the argument that by virtue of the fact that they're going to institute a digital euro, that they're going to do away with terrorism because they're not going to be able to finance it. So that justifies why you need a digital euro, why you need a digital dollar. That's that's a scam and a half. You need to do away with Bitcoin. You need to do with the ownership of commodities. You can't tell me that a terrorist can't take a handful of diamonds and go buy whatever he needs to go blow up a building somewhere. So there's other currencies out there far more greater and worth ownership, gold, Bitcoin, relative to the euro, that could help finance terrorism attacks. There is no benefit to the individual. There's only benefit to the state. The statists, the fascists, the Stalinists, the socialists. This is what they need to get absolute control. And the problem for the World Economic Forum, the reason why they need this, is that they can't rely upon these mental patients to do anything right. Because no matter what, they screw it up. Whether it's the central bank, whether it's the politicians, guaranteed they're going to screw it up because they're incompetent. So what they need is digital control. That's the only power that the World Economic Forum is going to have. But how did that help over in Nigeria? Did you know that Nigeria had or has, to a certain extent, they've gotten rid of a piece of it, central bank digital currencies. But how did they get into the central bank digital currency business anyway? Timbu is one of their presidents, I guess, was forced to do so by overseas an experiment by the IMF, the Fed, or the World Economic Forum. So basically what this is all about is that the World Economic Forum used Nigeria as a petri dish, a melting pot, or an experiment for central bank digital currencies. The problem is that nobody wanted it. Nobody wanted it. To this date, you have a 6% adoption rate of the digital currency. People, I thought I highlighted this. Oh, here we go. Why did it take them 3.5 months to condemn 100 million people to starvation? Basically, what they did is they reinstituted a new form of cash, but only the middle class and the upper class got it. And the underclass, the lower class, had to change their currency in for the new cash, yet they couldn't find it anywhere. So they had no money to buy food, goods, etc. The digital currency failed dramatically. And so this is what they want to bring failure from Nigeria, bring it over into the euro and the United States eventually. So I thought I had it up here. I don't. I had more about the U.S. adoption. The Federal Reserve has the white paper out about the adoption of the digital dollar. It is in experimental phase right now. And you have Fed Now, which is now launched. And they think that they're going to get this through without a vote in Congress. That's what they're hoping for. So if you're not screaming from the rooftops at your legislators, you got to do it because they want to push this through really, really quick. They need to get this through because they need that control. Why do you think they're pushing EV vehicles? What, for the climate? It costs more to produce those cars in terms of carbon emissions than it does for a gasoline-fueled engine. Plus, not to mention what you're doing to the environment. And plus, you have kids crawling around in mines digging out cobalt. It's insanity. So understand the grift. So what do we want to do? Well, we want to be long ago. We want to be long ago. Now, as I mentioned earlier, I think gold is going to break out. You do need the dollar to either A, flatline or go down. You can't have the dollar rallying strong to have a sustained rally in gold. I think that, though, we are going to get the correction in the dollar. Why? Because we're going to, as I showed you, the CME, the Fed Watch tool, is predicting rate cuts in March and really in May. And between now and then, no more rate hikes. So unless, of course, the U.S. economy goes gangbusters, meaning GDP really ramps up dramatically and causes the dollar to move up higher, there's no real catalyst out there for the dollar to move up higher. Now, taking a look at our customized version, I'm going to give you 2 charts here of gold. Actually, 3. So here's gold, candlestick pattern. I mean, this is a beautiful, beautiful chart. I think that once we do break out on gold, it is going to be a burst up higher. I mean, we're not going to be talking about $20, $30. I'm talking about 50, 60, $100 in a week. And that's how we're going to get through all of this overhead supply. Because you can see breakout number 1, rejected. Breakout number 2, rejected. Breakout number 3, rejected, because there weren't enough bullish buyers. But once you start getting people waking up to the fact that the Federal Reserve is done raising rates and they're looking to cut rates, well then, dollar goes down. You got to put your money up somewhere. It's going to go into gold. It's going to go into Bitcoin. Let's take a look at the line chart here. Now you can see vis-a-vis the line chart. I mean, we are right at the cusp of a major, major breakout here on gold. I tried to buy more call options on gold on Friday. They wouldn't take my offer, and I put it at the midpoint, and I kept it out there for several hours. I tried to sell puts on NUGT, and that's the gold mining ETF, leveraged ETF, not for the faint of heart. And they wouldn't take my offer. So it was a light volume day. I'll try again tomorrow. Hopefully they don't spike up gold tomorrow. We're going to be looking to add to our gold mining trade and our gold trade. And we've already added to GDXJ. That's more of our investment vehicle. You don't want to use NUGT as your investment vehicle. Really, it's more of a swing trading play. And once I do have those shares assigned to me eventually, because I'm going so close to the money on the puts, we'll be selling using a call option writing strategy, covered calls on NUGT. So more to come on that trade. And let's take a look at a weekly chart of gold. Here's the weekly view. And folks, we broke out last week. That's a beautiful, beautiful breakout. I'm sure volume was light, but not that light. It came in higher than it did the prior week. So that's pretty bullish stuff. This was an abbreviated week. Look at the Stokes here. Stokes hooking up. RSI hooking up. Let's check out the daily view. I'm hoping for a pullback here. We may not get it. So I would look to buy more on a retest of any breakout on gold. I wouldn't go chasing it. No, definitely no. Screaming from the rooftops. Don't be afraid. She's a little, yeah, because once they institute that, that's it. That's it. Game over. Digital control will not stop terrorism. Of course not. That'll be the selling point. They're gonna create fear, and they're gonna create the solution. The digital dollar, the digital euro will be the solution for why we're never going to have another war again, a terrorist attack again. It's going to be great for everyone. They are going to sell the sizzle here like you've never seen before. They are going to do a real hardcore press on the public to make this seem like the second coming of Christ. But don't believe it. You can't give these thugs any power whatsoever. Look what they've done over the past 5 years alone that we know about. Let's take a look at, we have about 5 minutes left here. I need to go to members first, and I have a hard stop at 7 o'clock. I do want to go over NVIDIA for a moment. Now, NVIDIA has an interesting 30-minute chart. Okay, so we have a few requests I got to go over, but I do need to log off at 7 o'clock tonight. All right, so let's go to, I annotated this chart, and this is what I'm hoping for on NVIDIA. All right, so first let's take a look at the weekly view and let's do a deeper dive here. We'll drill down to the 30-minute. Now, on the week last week, we saw a bearish key reversal bar on NVIDIA, one of my top 5 favorite candlestick patterns. Link below, 5-part video tutorial, free. Volume, light, as you might expect. So the expectation for lower lows here is pretty high. Now, on a daily view, we're rolling over. Momentum, bearish momentum setting in. No new daily low on Friday, but I think that we are going to press lower here over the course of the next several days. Now, net, the reaction to earnings, I had expected, we shorted NVIDIA immediately after they reported earnings because I heard their guidance out of China. And I said, you know what? They're not moving this thing. In fact, they moved it up higher. Initially, they dropped it down, then they rallied it back to pretty much unchanged, and then I shorted into it. And we booked a profit the next day or the day after, one of the two. And we got out of it. So I'm no longer short. I don't want to sell premium here, but I may be a premium buyer, meaning the options are very, very cheap. So if I decide to short this, it'll be using long put options, a put spread. But one bounce I'm expecting to see here is off of the 30-minute view. So we went over the weekly chart. We went over the daily chart, both bearish, right? So now let's take a look at the 30-minute chart. Now, at first glance, it looks as though, you know what, we may have a higher low here. And they're trying to break this out. You can see that there's some pressure at this upper band of resistance. That's one way of looking at it. The other way of looking at it is that, keeping in mind that we're using multi-time frame analysis, I don't base my trading decisions simply on a 30-minute chart. I want to know what the daily chart looks like. I want to know what the weekly chart looks like, because they dictate the probability of any trade on a 30-minute chart, because that's the macro trend. So right now we know we have selling pressure on a daily chart, weekly chart. Do I expect NVIDIA to break out tomorrow morning? No. What I'd like to see it do is to gap down or move down to this 467.50 mark, which acted as support back here in November, early November. And that would be a filling of this gap. Well, actually, this gap was filled. So we filled this gap already. But that's good support where we could see a counter trend rally off of that support level. And I think that we should get a healthy move. I wouldn't stay long, but I think that we could get a 1-2 day bounce off of that support level, because these stochastics are very, very oversold. And I'm hoping that they become more oversold. And we're going to take a look at getting long of NVIDIA, quick bounce, quick swing trade, not an investment, and not a long-term swing trade either. In, out, 1-2 days tops. So that's NVIDIA. Now, if they gap it up, I'll probably short into that 490 mark, NVIDIA, because I think it's going to go lower. All right, let's bring up our friends over at TrendSpider. I want to talk about nat gas for a moment, going over seasonality. We'll use UNG as our proxy. There's the weekly chart of nat gas. And I want to see seasonality. Ugh, horrible seasonality. Horrible. Looks like I'm going to have to get out of that trade. All right. Something else happening here. We have that was the Russell 2000 breaking to new session lower lows. We're still holding support. So it's not a confirmation breakdown yet. All right. Okay, so I have a couple of chart requests I need to get to, and NatGas not looking good. I don't even want to talk about it anymore. It's not a good trade on my part. AMZN. Amazon looks good here. We do have, this is a weekly chart. We're holding support. Bullish reversal bar on the week, light volume, as you might expect, daily view. We do have resistance immediately above. And by the way, we're using TrendSpider. I did not draw these trend lines. This is the algorithm that does it. They're doing an 82% discount. Link below. Use the link below. Don't use my discount code. You'll pay too much. Use the link below. Go over there. They give you 82% off. Support right at 145. Resistance immediately above. We're too close to a breakout point for me to initiate a new trade here. I would wait for the breakout. And that would be on a close above, let's call it 148.50, because you have another resistance level immediately above. So Amazon looking pretty good to the long side. And I think that is about it, folks. Hey, folks, it's after 7. I hope everybody, again, had an awesome Thanksgiving. I want to say thank you for being here. Like, subscribe. You know the deal. Have a profitable trading week, and I'm looking forward to a great Christmas, Hanukkah season, and I hope you guys are along with me. Talk to you soon. Be well.